So today I want to talk about a very simple subject: structure, market structure. What is market structure? How to trade market structure? Okay, first and foremost, market structure apply in every time frame. Any time frame you decide to trade, either daily time frame, 1 hour time frame, whatever. Market structure, market. Okay, let me just start here. Market trends. It either trending up or it's trending down. When it's trending up, you'll have structure like this: up, pull back, up, pull back, up, pull back, so on and so forth. When it goes down, same thing: down, pull back, down, pull back, down, pull back. That is structure. How do you know that the structure is now broken? Let's say we were on an uptrend. We're going up, so we had this up move, then we get this pullback. After the pullback, the last point, that is your structure. That is a key point for you. It goes up, pull back, impulsive move up, the last pullback point, that is your main important structure point. Is a key point for you. Up again, pull back, the last pullback point, your structure. Then if market now reverses, touches here and break below this structure, now the structure up has now been broken. We're now on a down structure again. Now if this now is now broken, then you will get the same thing over and over: pull back, down, pull back, down. If now it comes back to this point, break it or touch it, it just forms a double top. Continue. This is your last point of structure. Let me just I want to start it afresh. Remember, I said structure apply in any time frame, because of I was talking to a good friend of mine, so we were talking about structure, market structure. Here's the thing: it's on an uptrend now. Let's just make an example. It goes up, pull back, up. You'll draw this as your last point of structure. Down, sorry, pull back, continue higher. You'll draw this as your last point of structure. Pull back, continue higher. This will be your last point of structure. You draw these lines like this, then market might come to this point and touch it, form a what? A double bottom at this point, and continue higher. It did not break structure. The structure is still up. We're still on an uptrend. If it now comes back again to the same structure, breaks the structure, then it means we have now broken the up structure. We're now on a down structure. Now we're going down. Same thing over and over. Down, pull back, down. This is your last point of structure. Pull back, down, your last point of structure. If it touches this point and break below, above, sorry, then your structure to the downside has now been broken. You're going to the opposite direction. So like I said, structure can apply in any time frame, but the higher the time frame, the better. Sometimes you can have your, let's say you have your daily time frame. It's on a downtrend. Then you have your 15 minutes or whatever. The structure is now messy. There's like, it's on an uptrend, pullback, so on and so. You can still trade that structure. It's up to you. Whatever time frame you are looking at, that structure will apply to that time frame. Because if you are entering on a 15-minute time frame, it means you'll be looking at structures around 15 minutes. Okay, let's quickly go to Nasdaq quickly. Let me just open a chart for Nasdaq, because I have Nasdaq open here. I have Nasdaq here. And I'm actually going to go to a smaller time frame. I'm going to go to a smaller time frame. Okay, it's loading slow. When I start from a smaller time frame, show you the structures that I have and why am I looking at those structures. It's loading very slow, my internet ish. I guess I will pause, then come back with a continuation video. Okay, so this is my Nasdaq. Ne? I'm on a 15-minute time frame. Structure on a 15-minute time frame. Last current structure was an up structure. We were going higher. This market was going up. But on a long-term basis, this was just a pullback. But on a short-term basis, it was going up, meaning you can still buy around this level. So let me show you what I was looking at quickly. Check. Okay, sorry about that. You have your impulsive move up, you have your pullback, you have your impulsive move up, your pullback, so on and so forth and so on. these are your points of structures where I have drawn. These are your points of structures. These are your points of structures. Let me just cancel this. Why is this here? These are your points of structures where I have marked like this. This was the first point of structure. Why am I saying this? Because this was the last pullback point. It went up, pulled back, up again. Then when it came to this level, once it breaks to this level, that's when you look to sell. You sell to the next, up until the next structure. This is the next structure. If it breaks below this structure, oh, this is also a structure here. It's also a structure. I think I missed that one. If it breaks below this structure, it will come to the structure again. So on and so forth. It will continue like that. Then if it breaks, my target, if I'm looking at this trade, will be around this point here. Maybe from this point it might maybe touch and go up, or it might break and go below. But here's the thing. Okay, let's look at this thing on a higher time frame now. Maybe let's go to, it made a huge, like a big ass drop on a higher time frame. This is your structure. This is your 1 hour. You have something like this: a drop, a small pullback, a drop, a small pullback, a drop. This is a pullback. Your last point of structure is this one. If market can go up and break above this point, then we are buying. We're not looking to sell. But at this point, we are selling. It's only safe to sell. No buys. And if you go back to history and study how Nasdaq has been moving in the previous past, Nasdaq has been selling off every September. Nasdaq has been selling off. Okay, guys, subscribe to my channel and like this channel. Share with your friends if this is good content for you. All the best for the week.